Hello and welcome to TA for Traders. It's Wednesday the 28th of June and I'm Nigel Croft. In this video we'll be looking at two UK stocks, Carphone Warehouse, which has come out with figures this morning. Initially it went up but it's coming off, and looking at the charts looks like it's going to go lower. We also look at AstraZeneca, where the results are expected of a lung cancer drug. There's been buying in the options market, and we'll take a look at the charts there. Actually doesn't look that bad. In America, Google, yesterday it was hit with a fine by the European Commission. So we'll look at Alphabet, GOOGL. And today, General Mills, code GIS, is coming out with results, and we'll look at the charts of that stock as well. If you're not a subscriber to my YouTube channel, please do hit that subscribe button. You'll then get email updates every time I do emails. I do videos on most days covering the FX, commodity, equity index, and like this video, single stocks. Let's get on with the video. So starting with Dixons Carphone, and you can see that today the shares did open up, but they've come off, and we've got a big red candle. What can we say about this? It does look negative. We've had a bearish cross on the 20 days. It crossed the 50-day on the 15th of June. We've got downside momentum as the RSI's in a downtrend, well below 50, 34.23, and the downside momentum's confirmed from the MACD, which are both tracking down well below zero. If there were any upside, as we saw this morning, there is resistance to the upside. There's key resistance levels are from this short-term downtrend at 310, 320, with the 20-day coming in at 311.66. On the weekly picture, you can see that we're going down into new low ground for 2017. RSI again negative, and actually the MACD only just turning over and shouting a sell signal. So it all bodes well technically, I would say. The medium term picture very much in a downtrend. Quite a surprise that the 200 week is still moving up. Just shows you where it was historically. That will roll over, but it's got to get, if on any rally, it's got the resistance on the dailies, never mind these weekly moving averages to counter. On the 4-hour picture, and again you can see this downtrend that's in place. We did go above the 24-hour moving average initially today, but we've now come back below it. RSI 32.79, just bubbling along the bottom, and again the MACD, the shorter term only just gone below the longer term again, as negative momentum is confirmed. Looking at the support resistances, resistance 1 at 301.07 from the 24-hour, then at 309.89 from the 20-day, with the only support seen at 291.7. Moving on to AstraZeneca, you can see that the shares are under pressure, have been for the last couple of days. There is a key announcement expected on some lung cancer drug, and that's hit sentiment, and there's been large buyers in the option put market. We are falling towards support. The 20-day, which was support yesterday, has succumbed today, which is a disappointment, but there is this band of support and another band on this kind of flaggish uptrend that we've been in since the middle of May. One would hope that would hold. We have broken an uptrend line that could be drawn between those lows, so be aware. The RSI still above 50, but definitely creating a downtrend. Likewise, the MACD starting to get concerned and indicate downside momentum. There is supports to the downside. I would expect, if it gets worse, for the shares to come off towards 5,200. The RSI could then become slightly oversold and expect to bounce. But I guess at best you're going to get range trading from here. On the longer term picture, doesn't look as bad. You can see this could just be a flag in the bull run. We did have the bullish cross on the 20, crossing the 50-week moving average. That was in April, so the medium term picture remains good. RSI is losing its momentum, just started to go sideways. MACD still okay. So if there were a consolidation, it could still just be a flag. It would need to break 5,200 to the downside for that flag to be broken. On the 4 hour, you can see that we're back to support. The moving averages are starting to roll over. They did cause a bit of support on the downside, but only for a period of 4 hours each, so we're back below the 20 and the 54-hour average. The RSI is definitely indicating negative momentum on this time span, and is down at 41.34, and the MACD just started to flash a sell signal. There was a gap left on the previous 4 hour, so be aware of that. That's the first gap we've seen, so could bode ill. But as I said, there is these support levels 52, 58, 51, 19, and looking at the more official support resistance levels, 52.18 on the support, actually 51.70 below there, with resistance at the 20-day, which is 53.45.2, and then 55.20. Okay, let's move over to the Americans and looking at Alphabet, GOOGL, the old Google. Got hit yesterday by the European Commission with a large fine. When you do a search something to buy, you shouldn't see it in the Google shop so prominently. It's come back to the support of the 50-day moving average, the 20 days rolling over. This support could still be a flag. However, there was a massive gap left on the 28th of April between 8.89 and 9.25. Be aware that if we get back into that gap there, it will fill it, so it needs to stay above these supports really for the medium term picture. The RSI is indicative of negative momentum, as is the MACD. RSI presently 41.76. Moving on to the weekly, we had an engulfing picture. In fact, we've had two engulfing pictures in the last month. We had the first one the week of the 5th of June, and we've just had we'll probably have one this week, which bodes well. If it is to be a flag, we really do need to hold these supports. The 20-week would come in after that at 906.91. On the RSI, you can see it started to tick down, still well above 50. MACD still flatlining, but still showing positive momentum on this weekly picture. On the 4 hour, and you can see that gap that I am concerned about. So I'll just turn the cursor off. You can see the gap that I am concerned about. It would need a fall below this low of the 12th of June, which is at around about the 936 level to be a major concern. But if we do fall below there, we probably will fill a gap, and that would see us down below 900. The RSI is below 50 and the MACD just starting to indicate a sell signal on this chart. Looking at the support resistance, we've got resistance 1, excuse me, 978.64, which is the 20-day, and then 993.99, with supports coming in at 936.8 and 920.8. Okay, moving on to the final stock that we're looking at today, which is General Mills, GIS. It's got figures coming out after the market close. Technically, it doesn't look good. It's falling to a new low. It's got negative momentum, and the moving averages are just about to create a bearish cross. So it looks not so good. If there were some upside after the earnings, there's resistance from those moving averages, which are around 57, but really I can't see that happening. On the weekly picture here, we've got an elongated head and shoulder formation with the left shoulder here, head, right shoulder, a break below, not much lower than we are now. 54.9 will be confirmation of that head and shoulder, and further downside would be expected, really with a target below 50. The RSI is bumbling along the bottom, 31.8, showing real negative momentum, as is the MACD. On the 4-hour picture, you can see that the downside momentum has picked up dramatically over the last 4 days. RSI now at 32.21. The moving averages here have created a bearish cross as the 20s cross the 50. Again, that bodes well for the medium-term picture and would give severe resistance to any rally. Looking at the support resistances, 57.01 first resistance 50-day, 57.07 very close. I mean, there's loads of resistances on the upside. That's the 54-hour, with support 1 at 53.57 and support 2 51.39. So that's been TA for traders. I've cracked through 4 stocks. I hope you've been able to keep up. In the UK, we looked at Carphone Warehouse, which looks terrible after the figures. We looked at AstraZeneca, which is trading cautiously ahead of an announcement and needs to hold key support. We then went across to the States. We looked at Google, where there could be a gap that could be filled if we go any lower. That would be a disaster and see the shares fall quite dramatically. And we looked at General Mills, which has got figures coming out today. It doesn't look good. On the weekly, there was a head and shoulder, and actually if you look back at this video and look at the 4-hour, you'll see there's a head and shoulder there. So it doesn't look good, and downside should be expected after the figures. Thanks for watching this video. Please do remember, I do these videos for information only, and I suppose for educational purposes. They're not meant as an investment recommendation. Please do read the disclaimer. Thank you.